Good morning, I'm Lauren Hayes for the Finance News Network. US equities were sharply lower in Wednesday trading, ending near session lows. The S&P and Nasdaq finished lower, erasing gains accumulated over the last three sessions. All eyes were on the midterm US election results. Joe Biden and the Democrats have avoided sweeping defeats but still risk losing control of Congress to the Republicans after election results showed Americans are unwilling to hand a strong political mandate to either party. The outcome of the vote was a comfort to Biden, but dealt a blow to the presidential ambitions of Donald Trump, who was counting on victories by Republican candidates he had endorsed to power a new run for the White House in 2024. While election results are still uncertain, the red wave that models, investors and betting markets anticipated did not materialise, and near term that will add to already elevated volatility. Markets will now look to Thursday's CPI data for more news on the inflation front. The Dow Jones Industrial Average fell 2%. The decline was led by Disney, which fell more than 13% after the entertainment giant missed analyst estimates on the top and bottom lines. The S&P 500 shed 2.1% and the Nasdaq slid 2.5%. Stocks fell to session lows during Wednesday afternoon trading as the price of Bitcoin dropped to its lowest levels in roughly 2 years, weighing on overall risk sentiment and dragging down the tech sector. The Wall Street Journal has reported Binance walked away from the rescue of crypto exchange FTX, adding more turmoil to the broader crypto market. Bitcoin futures were down 9.5%, holding below $17,000. In company news, Elon Musk has sold billions more in Tesla shares to pay for his Twitter deal, selling nearly $4 billion worth of shares in recent days, according to regulatory filings, bringing his total sales for the year to $36 billion. And Facebook's owner Meta will lay off 11,000 employees, equivalent to 13% of its workforce, the company announced overnight in the biggest restructuring in the social media giant's history. A slump in digital advertising and ballooning losses from its pivot to the metaverse have pushed the company to make a series of wide-ranging cuts. Affirm shares plunged 22% after the so-called Buy Now, Pay Later company posted a wider than expected loss for its fiscal 2023 first quarter. Investors are paying close attention to Affirm's earnings as they should offer clues to the health of the consumer amid challenging macroeconomic conditions. Across the sectors, no sector was spared overnight, with energy hit the hardest. The sell-off came as markets had expected the Republicans to take power, which would have been favourable for dirty energy. On the currency front, one Australian dollar has weakened compared to the US dollar yesterday, buying 64.27 US cents. Now to commodities. Iron ore is 0.6% higher and its futures are pointing to a 1.2% fall. Gold lost 0.4%, silver dropped 1.8%, copper lost 0.3% and oil fell 3.7%. The SPI futures are pointing to a 0.9% fall. I'm Lauren Hayes. Have a great day.